Hey, welcome back, everybody, to Investing with KJ. KJ, the investor here, where we make investing for beginners very easy. As you can see, tonight the market is started back to move. It's June 1st right now, so it's Sunday night. Nothing pretty much happening so far in the market, but I'm dedicated to bringing content every day. So, guys, I just want to kind of give you a rundown of what my portfolio is looking like. As you know, we on the road to 100K, and before we even get into this thing, do me a favor, if you don't mind, hit that subscribe button. If you find this information helpful, like, comment, anything that you want to ask or say, put it down in the comment box for me, and I got you. We're going to make investing easy and simplified for the beginner investor. Everybody's welcome to this channel, to this page, but I'm especially targeting the beginners because we are in this thing together. I'm a beginner investor myself, even though I've been investing through my jobs 401k for a while. As far as me being a retail investor, this is my first time really taking upon myself to do so. So I've been investing on my own since January. This is what we got so far. My portfolio is looking like $33,271. Okay, I got a little over 1,800 in buying power. Interest accrued this month so far. Like I said, June just got started. It's 41 cents. Lifetime interest paid so far, almost $50. Cash earning interest right now, 1582. Look for that to change when the markets open up in the morning at 9:30. It will be Monday, so the markets will be back open. Right now, for my crypto holdings, I have 101 shares of USDC, the United States Dogecoin. So, or dollar coin, I'm sorry, dollar coin. They're like $1 a piece, so I just got 100 of them. The AVAX, not much going on with that stock, $35 worth. And I sold out of my Ethereum for a profit. So that's all the crypto holdings I ever had. Stocks and ETFs. Let's go ahead and jump into it. I got one share of VU still. Y'all, I bought this one share of VU back when I first started investing. Average cost was $444.91. Right now, the market value is $578. So I make a little bit of money off of it. Total return is $48.88. It makes up about 9% of my total portfolio, which one share of one ETF doing that, it's kind of major. But yeah, VU. Okay, next we got Microsoft. Got a little over 3 shares of Microsoft. As a matter of fact, they're getting ready to pay me a dividend in a couple of days, June 13th. I got a $2.60 dividend coming. But like I said, I only got 3 shares in this thing. Average cost $407.59. The market value right now is $14.45. As the close of business on Friday, I had a return of $6.83. Total return $32.97. Makes up about 2.33% of my portfolio. And I'm looking to expand on Microsoft. Microsoft is one of those companies out of the Magnificent Seven that I'm really looking forward to. If I hit this year-to-date tab, you see right there why. It's 11.57% year-to-date. Anything over 8%, guys, I've told you before, anything over 8%, we're getting rich. That's our motto here on this channel, and we're on the road to 100K. So guess what? We need all growth that we need all the growth we can get. All right. Next up, we got Amazon. Amazon, I got 3 shares of Amazon. And really, for the longest, I've only had 1 share. Back when Amazon did this last split, I bought a share of Amazon at 102 a share. And these last 2 shares, I've bought them a little bit higher. That brought my average cost way up to $152.81. It's for a market value of $531.58. Friday, we were down like slightly, just a couple of cents. But total return for this whole thing, I've got $72.90. It's up 15.89% since then. Year to date, this stock is going up 16.87% year to date. Anything over 8%, guys, we're getting rich. Okay. I'm also looking to increase Amazon, just like I'm going to increase Microsoft. Those two positions, definitely going to put some more money into those. Okay, next up we got Apple. I bought Apple back at the beginning of the year in January. Apple has been doing fairly well. For the year to date, Apple is up 3.16%. I'm going to tell you, Apple is one of those companies that's already a behemoth. It's already grown. It's a growth stock too. Also, one of the Magnificent Sevens. It was the number one company in the world by market cap for a long time. Recently, Microsoft took over that position. And so Apple is the number 2 company right now in the world. But I have invested in them pretty good. I got 21, almost 22 shares of Apple for a market value of $42.14. I bought it at the average cost of $174.94, and finally it's back over that. It's at $193. For the longest, it was under that $174, and I was in the negative with Apple for a long time. I had a total return of $395.57 for a value of 10.36% up. So, yeah, Apple has been a good stock. I'm not sure if I want to expand on my position with Apple. I do use Apple products, iPhones, iPads, etc. So, oh yeah, the MacBook. I got all of those things. So yeah, Apple is a company I use. Therefore, I invest in them. I'll probably grow this eventually, but not as much right now. I'm just kind of letting the dividends pour in from Apple and kind of let it go from there. Okay, next up, I got Alphabet Class A. It's the parent company to the actual company, Google. Class A, Alphabet Class A just means you have voters' rights. Class C means you don't have voters' rights. So right now I have Class A. Google, I have 12 shares. For a value of $21.47. Average cost was $142.86. I wish I would have bought more at the $142.86 because you can tell right now it's up to $173.07. I have a total return of $374.81, up 21.14%. Year to date for Google is 24.92%. Anything over 8%, guys, we're getting rich. And as you can tell, Alphabet Class A is definitely getting us there. So I'm definitely looking to expand my position on Google, just like Amazon and Microsoft. Those 3 companies right there. I already said that from 2024 and beyond, I'm going to expand those positions. All right, the next up, we got SCHD. It's the Schwab U.S. Dividend Equity ETF. It's trading at $78.82 right now. I have 64 shares of SCHD with a market value of $5,072. My average cost was $77.98, and something's brought that up lately because I've been buying more shares of SCHD at the higher price, just kind of dollar costing in. No matter what it costs, I'm just kind of buying it. As of Friday, I had a return of $16.09. Total returns right now is $54.12. So I am up in this position. Year to date, it's only up 3.90%, but it's not one of those growth ETLs. It's more of a dividend paying ETL. People own SCHD for the dividend. It does grow some, but since they restructured the company, the ETF, different companies come in, different companies go out. I mean, different things like that. So it's more so for dividends. Okay, next up we have Walmart. Walmart is trading at $65.71. I have 40 shares right here. Market cap $26.40.94. Average cost is $59.35. As of Friday, I had a down return of $2.01, but total return, I'm up $255.53, which is up 10.71%. Year to date, Walmart is up 25.36%. And anything over 8%, guys, we're getting rich. So I will be expanding more. I will be expanding my position in Walmart. Also, I do want to add that I formerly worked at Walmart, so I also have an associate's start portfolio with the company, as well as my own private portfolio, which is this Robinhood. But my associate stock portfolio, I already have over 50 shares in that portfolio as well. So I got 40 in my personal and 50 in my associate stock program. And when I merged the two, I really have over 90 shares of Walmart. I'm going to continue to look to build upon that position, and also I'm going to get well over 100 shares of Walmart. So that also pay a pretty good dividend as well. Next up, we have SPLG. I am loving SPLG. I definitely thank God that I found this particular ETF. It is my S&P 500 tracker. Right now it's trading at $62.19. I got 110 shares of SPLG. By far my largest ETF or stock or anything, any holding that I got, it's the largest one. For market cap right now, $6,888.18. Average cost was right at $60. As of Friday, I had a return of $18.83. Total return right now, I got $243.84. Up a little over 3% year to date. Year to date, however, you see it's up 11.99%. So basically 12% up since January. This is SPLG. It is the S&P 500. So it's the top 500 companies in America. It's tracked in this sector, SPLG. So if you can't beat the market, and I know a lot of times it's hard for us to beat the market. Not even a lot of experts can beat the market. But if you can't beat them, join them. And that's what you're doing with SPLG. It's the S&P 500 tracker. So that's a good thing they have. Next up, I have in my portfolio Coca-Cola. Right now they're trading at $62.87. I have 26, almost 27 shares of Coca-Cola. The market value is $16.87, 91 cents. Average cost is $59.45. As of Friday, I was down $1.61, but total return altogether is $91.92. Year to date, Coca-Cola is up 6.92%. It strongly has the potential to reach that 8% return, which I need all my stocks and ETFs to return to me per year is at least an 8%. So you know the motto, at 8%, anything over 8%, we're getting rich. So that's the whole goal of investing, that because we want to be free. You guys, we don't want to have to spend all our lives on a job making somebody else rich, but we want to take the money that we made. We don't want to spend on unnecessary items, make other people rich, but we want to put it into our portfolios, buy assets to make us rich. And I highly recommend Coca-Cola for anybody that's a beginner. It's great for the stock, and it's also a behemoth of a company, but it's still growing. So Coca-Cola is a good one. Okay, next up, I got Sirius Satellite Radio. I got one share of that one, 2.89 is the cost of it. I won't even click into that one because, like I said, Sirius Satellite Radio was given to me as a gift by Robinhood when I first opened up the app. If it wasn't for that, I would have never had it in my portfolio, just to be honest. It doesn't go up enough. It doesn't do enough. Next up, we got DGRO. Okay, clicking into DGRO, it's a iShares Core Dividend Growth ETF. It pays dividend as well. Also, it's known for its growth. So it has a lot of growth companies in it. DGRO is trading at $57.64 right now. I have 66 shares. I try to keep DGRO and SCHD kind of on level playing fields. SCHD, I got 64 shares. DGRO, I got 66 shares. I'm planning on raising both of these up to catch up with SPLG, which I have like 110 shares in SPLG. So I need all three of these to be well over 100 shares apiece. And so that's that's the goal. Right now, the market value for DGRO is $38.27.21. Average cost of $56.38. Today's return, well, as of Friday, was $3.32. And total return right now is $83.62. Year to date, this ETF is up 7.64%. It's very, very close to that 8%. And you guys already know the motto. Anything over 8%, we're getting rich. So DGRO, I recommend that for anybody that's a beginner that's looking for something to put your money into, a safe haven. That ETF is good. Okay, next up we have FTEC. FTEC is the Fidelity Information Technology Index ETF. Right now it's trading at $158.73. I have a little under 5 shares of FTEC. As a matter of fact, the market value for that is $72.28.52. The average cost is $153.76. And as of Friday, I had a return of not even a whole dollar, but a total return right now of $22.82. Year to date, FTEC is up 12.13%. And this is actually an ETF that's good. And it's had its ups and downs. It tracks the Magnificent Seven. Not only that, it tracks anything really in the technology sector, but especially the Magnificent Seven, because those are the 7 biggest companies in the world by market cap size that's getting tracked in this ETF. FTEC is a good one to get into if you are looking for a way to multiply your money in an almost sure way. With this AI and technology taking over, I mean, you can't really go wrong with FTEC. Like I said, it's up 12.13% of the year. And anything over 8%, guys, we're getting rich. So next up, we got Starbucks. Starbucks is right there at $80. I'm going to tell you about Starbucks. I did not grab Starbucks to have Starbucks. As a matter of fact, like, I just did this for a quick time play. I don't want you guys to get it confused. Like, I'm in the stocks for the long haul. I'm investing. I got a 10-year plan with this portfolio, but it's some things that you can jump on because you see a really, really good price. And when I jumped on Starbucks, my average cost was $74.62. I got 12 shares of it, almost $1,000 in market value, and I did not put nowhere near $1,000 into it. As of Friday, the return was down $3, but total, you see my total return is $64.70. I'm in the positive by 7.18%. Not bad, and I'm also getting a $7 dividend. I mean, it's going to be reinvested back into the stock. Like, there is nothing wrong with this play. I called it when it was actually at the bottom of where it was going to drop. I think the 52-week low for Starbucks was like $73. And I called it at $74.62. It's only going to go back up to the 80s and to the 90s and the 100 per share. And once it do, I've made money. So that's the whole purpose of this. Sometimes I know people like, oh, you're supposed to stay in for the long term. But guess what? Sometimes a short-term play won't hurt. And like I said, so year to date, it is down 16.21%. So I really caught it at a real good deal. And like I said, it can go back up half of what I caught it at. And guess what? I'm making over 8%. And anything over 8%, I'm getting rich. I'm looking for this stock to go back up to some positive numbers, like big time numbers. And I'm going to sell off and get out of Starbucks. Okay, the next one, the newest addition to the stock portfolio is NVIDIA. Right here, right now it's trading at $11.2160. I bought NVIDIA. My average price is $11.06. Wow, just that quick, I've made, oh my gosh, look at today's return already up 15.44. Guys, today is Sunday. The market was closed, around 9 o'clock-ish or whatever on Sunday night. The markets kind of start back up. And in just no time at all, I've already gained $15 back just that quick. Total return, $8.40, just that fast. My market value is over $600, and I didn't put $600 into this when I bought them. So I'm at $608. As a matter of fact, year to date, look at this. Year to date, NVIDIA is up 127%. Oh my goodness, almost at 128%. Anything over 8%, fellas and ladies and gentlemen, we are getting rich. But this number here is extremely over 8%. It's 127%. I should have gotten NVIDIA a long time ago, but before it was a small company. I didn't know much about it. It is one of the Magnificent Sevens, but like I said, didn't know much about it. I can't go back and cry over spilled milk. All I can do is pick up my head now, jump into it at a good price, at a good cost basis price, and keep putting into it. Coming up in June 10th, NVIDIA's finna do a 10-to-1 split anyway. So if you guys want to jump, take a partake of this stock right here, June 10th, make sure you consider jumping into NVIDIA. I can't tell you to do it because YouTube will get us or whatever. But what I'm trying to tell you is I strongly, suggest that you do your research on NVIDIA. And, I just showed you the percentage that it goes up, that it has went up. History tells us that this stock is where it's at. All right, y'all, I'm finna end this video right now. That's my portfolio. A little over 33,000. I also have 4,000 in cash in another account. Also, I got a Fidelity account. Me and my wife share. We got just over 300 in there. Also, I have another retirement investment account, Merrill Lynch, and I got another 35,000 in a high interest savings over there. So all together, guys, I got also the associate Walmart stock. That's going to be another 3,300 over there. So all together, I'm sitting on 75.5. I think it's over 75K. So we're on the road to 100K, and we're trying to get there by next year. So I need you guys to tune in with me, man. Like, comment, subscribe, share these videos. Any kind of questions you have, put them in the comments. I'm answering all questions. Thank you so much. I'm KJ the Investor. I hope you enjoyed this. Until next time, bring you videos every day. So until next time, peace.